This is Dyer Kennedy from Divergence Analysis. I'm going over the DVAN SmartLines trading app available on Bloomberg. The DVAN trading app consists of 5 studies: DVAN buying selling pressure, DVAN SmartLines, DVAN long-term trend, DVAN short-term trend, and DVAN signals. Currently on the chart I have DVAN buying selling pressure activated only. This is a chart of the SPX index, the S&P index, on a 5-minute chart. So I have DVAN buying selling pressure indicator loaded onto this chart. The indicator consists of 2 main parts. The first part being color-coded price bars. As you can see, price bars are either color-coded green or red. There's an algorithm running underneath these price bars and measuring buying and selling pressure in the underlying security. When buying pressure is dominant, green price bars are painted. When selling pressure is dominant, red price bars are painted. This helps confirm other signals in the other DVAN SmartLines studies, and also helps with entry and exit points, which I will go over throughout the video. Secondly, in the DVAN buying selling pressure study, you see shading that is outlined by 3 lines. You see a light blue line, which is called the trend line, the gray dotted line, which is called the pivot line, and a red line, which is called the stop line. Surround prices and show points of support and resistance and buying and selling cycles throughout the price movement. When the 3 lines converge, as you see here and here, also here and here, when the 3 lines converge, that signals a buying or a selling cycle beginning. Green price bars through a convergence mean a buying cycle. Red price bars through a convergence mean a selling cycle. Now back to the 3 lines. As I mentioned, the light blue line is the trend line and the gray dotted line is the pivot. These lines work together in that when prices cross above the gray dotted line, the pivot line, it turns the trend line up. So the pivot line is plotting the price point 1 period forward at which the trend line will change directions. You can see that here. As prices reach relative highs, the prices slowly begin to fade and ultimately close below the pivot line. As this close below the pivot line takes place, the trend line turns down. So looking at these buying and selling cycles, you can note the trend by looking at the light blue trend line. If it's sloped up, we're in a positive trend. Sloped down, we're in a negative trend. The stop line is a point for ultimate stop loss points, and it marks the other side of the trend line math, meaning that the points of convergence between the stop and the trend line are important in showing the selling and buying cycles. Throughout the buying cycles and the selling cycles, the trend line and the pivot line provide points of support and resistance. So in the case of a buying cycle, you can see that the trend line follows the price movement up and provides points of support and resistance. The pivot line provides a point of support a little bit lower, but ultimately a greater stop loss point for identifying a good place to get out of the trend. As you can see, when prices turn red price bar, meaning selling pressure is dominant, and close inside the shading, meaning below the trend, this is marking consolidation and could be a good point to get out of a short-term trade. Conversely, on the downside, you see when prices turn green price bar and close above the trend, the light blue line, this is a good point to get out of the trade. Now I will add the short-term trend study. The short-term trend study just consists of a green and red shading in a panel below price bars. This study is plotting short-term momentum for swing trading and for quicker entry and exits. As you can see, when green shading is indicated, this is showing a very early indication of short-term strength. When red shading is indicated, as you see here, it's showing an early indication of short-term weakness. These are beneficial in entering and exiting positions early. And as you can see here, when the red shading occurs, this is a good place to get out of a long trade. When the green shading occurs, this is a good place to get out of a short trade. Also note, there's a zero line running through the short-term trend study. We'll look at other indicators later, but this is a good confirmation tool to use in entering a trade. When you see the green leading line in the short-term trend study crossing through zero, this is a point to look at for entries to the long side. And when you see the green line crossing below zero, it's a point to look for entries to the short side. We'll look at this more later as we add more studies to the chart. So now I will add DVAN Signals. DVAN Signals consist of an oscillator running in a panel beneath price bars and corresponding arrows signaling when the oscillator crosses its baseline below. Green arrow means that the green oscillator has crossed the blue baseline upwards. Red arrow means the green oscillator has crossed its blue baseline downwards. These are velocity-based signals and good for trading in and out of positions. As you can see, using the DVAN Signals study along with the short-term trend study provide confirmation of trend and confirmation of entry and exits. We get a signal here to the long side. We're still in a selling cycle. As we cross out of the selling cycle, break the resistance line, and the leading line of the short-term trend crosses up above zero, this is a good buy indication. As we get a short signal with the short-term trend already showing downward momentum, we break support of the buying and selling pressure line here, cross below. Also, while the leading line crosses below zero in the short-term trend indicator, this is a good short indication. I'm going to take short-term trend off and DVAN Signals off and add DVAN long-term trend. DVAN long-term trend consists of 3 parts. Going to make the chart a little bit bigger so you can see the dots. The 3 parts are a cumulative indicator running below in a panel below. This creates an overall bearish or bullish bias in the security. When the green line crosses above its blue baseline, it indicates an overall bullish bias. When it crosses below the baseline, an overall bearish bias. This helps when establishing a long-term trend and being able to enter and exit a trade based on the long-term trend indication. You also see blue arrows and yellow arrows. These are tracking momentum and are showing when momentum moves from negative to positive in the case of a blue arrow and positive to negative in the case of a yellow arrow. The green and red dots are also tracking momentum. When green dots are present on the price bars, momentum is moving in a positive trend and is crossed through a positive threshold, meaning that we're trending upwards. When red dots are present, momentum is trending downwards. The dots are very helpful in maintaining a position and position management. As long as you have green dots, you know that you're trending upwards and can hold that position. When the green dots disappear, it's a good place to exit. Conversely, when the red dots disappear, it's a good place to cover a short. I will show now the indicator that plots the arrows and the dots. If we add DVAN Smart Lines, I'm going to reduce the size of some of these panels so we can see. DVAN Smart Lines consist of 3 indicators below. I've just reduced the size of 2 of them so we can see the momentum based indicator here. You'll note a histogram, a 0 line, a green horizontal threshold line, and a red horizontal threshold line. The arrows are plotted when the momentum, as noted by the histogram bars, changes from positive to negative, as it does here. The blue arrows are plotted when the momentum goes from negative to positive. The dots are plotted when momentum is outside of this green line, meaning outside of a positive threshold and trending upwards. The red dots are plotted when the histogram bars are trending downwards below the red horizontal line. Momentum is fading when you see blue bars on either side of the 0 line. So in this case, momentum begins fading at a high. Momentum is increasing when you see red bars in the histogram. The second panel in DVAN Smart Lines consists of the same indicator that's in the panel below of the long-term trend study, except we also have introduced an intermediate red line for entry of swing trading. When you see green crossing through red, this is a good point to create positions on a swing trading basis, long and short. The third panel of DVAN Smart Lines is the same as DVAN short-term trend with the green and red shading, except presented in a histogram format. The difference is it shows consolidation. When you see green and red histogram bars together on one side, as you do here, it shows consolidation. This is a good point to exit or to reduce position size and wait for a confirmation of trend or to finish exiting your position. These are all 5 of the DVAN Smart Lines app indicators on Bloomberg. For more questions, please feel free to reach out at info@divergenceanalysis.com or dyer@divergenceanalysis.com. Thank you.